You're watching the Mortgage Busters and Investment Show. My name's Greg, and we say this every week. You need to pay off your mortgage at a fast rate of knots, but also prepare for retirement. Adrian.
Howdy.
How you going?
Goody, goody.
How much do you need to retire these days?
They're saying about 1.5 million.
It used to be $1 million, but now it's gone up to 1.5, which is at least about, I don't know, 75,000 per year.
That's not bad.
to live a good lifestyle.
That's big money.
We've got a special guest.
Yes, we've got something very interesting today.
Can I say welcome to Scott Schulz from Investorbyte.
Thank you guys. Very good. Happy to be here.
Fantastic. Tell us about what you do, because it's very special and it's very amenable and accessible to especially our clients or our viewers.
Sure. Well, I'll start at the beginning. So basically, I started my career in IT, worked in quality assurance for a number of years. On the side, started getting into property at a young age. At 21, I bought an apartment. I was lucky to have a few...
How did you manage that?
Saving.
At 25?
So at 21. So saved a lot of money, had a little bit of advantage from Dad. Lent me some money.
The whole apartment?
That would be nice. But he gave me a bit of a head start. And then a few years in, a close friend of mine started getting into property development. So I kind of deviated my approach into property development and went out and did a subdivision out in Baronia that was quite successful, highly profitable. But I learnt that it's a specialised skill developing, and I just didn't really have the appetite to go through it hands-on again. But what I did understand was that there's good money in property, as we all know, and that finding development sites and then finding the money was something that I found more interesting, so I moved into that. And then as I got into that business, I came across what was an online platform that delivers investments, and I thought, well, hold on, this is where the future is as far as finance and investing goes. So basically I jumped the gun, went out, created a team, and Investorbyte, the company, was formed, and here I am.
So Investorbyte, so you're obviously talking about investments and bite-sized chunks, or is it the bits and bytes from the computer?
No, so basically, yes. So Investorbyte is a play on words, meaning in investor group, or bite-sized investments. So I guess...
Which that would really interest our viewers.
Totally different.
Yeah,
normally everybody
Well, I guess the
exciting
part of our offer is that our minimum investment starts at $2,000. So for only $2,000, you have accessibility into high quality projects that are usually only able for sophisticated investors to access.
Which means what? 50, 100,000, what?
Well, a sophisticated investor, a wholesale investor, is someone that has an income of $250,000 a year or more and has net assets of 2.5 mil. So you're looking at excluding 95% of the population at that point, and then that leaves what's left, which is the bulk, and that's retail investors. And this is all about providing accessibility and opportunity to retail investors to participate. And it's called crowdfunding.
Oh, there's the word.
So yeah, that's the word. And so I thought.
So is that I haven't heard this before. Crowdfunding.
You haven't heard the term crowdfunding.
Well, only because from yourself, right? From what you do.
Sure.
But it's gaining popularity.
It's gaining massive popularity. Crowdfunding is the buzzword in finance at the moment, and certainly overseas, the popularity is astronomical. It's its own asset class already overseas.
Asset class.
Its own asset class.
That's important to explain.
So, crowdfunding. What is crowdfunding? Crowdfunding is when you go and you fund a project or a venture by collecting small amounts of money from lots of different people, and typically using some kind of internet online platform to deliver it. Because as you know, it's much easier online to deliver things en masse. So that's basically the crutches of crowdfunding. Now, crowdfunding is broken up into 4 main areas. So the first area is donation-based crowdfunding. So you guys probably would have come across it, where there's a non-profit or a cause, and someone's looking for money or a personal campaign. So that's donation based. We then have rewards based crowdfunding, where an example would be a company has a particular product that they're looking at launching, but they need some kind of capital to help them get started. So the participators will, put in a small amount of money and receive a reward like a film ticket or an album or a physical product. So then we move on to debt crowdfunding. Debt is obviously a word you guys are familiar with.
No, absolutely.
Mm-hmm.
And debt crowdfunding, or also known as lending or lenders. So lenders will lend small amounts of money. That money will then be lent to individuals or businesses with the idea of receiving back principal and interest. Then the more exciting crowdfunding version is equity crowdfunding. That's where small amounts of money from investors is able to be put into projects where they participate for profit share. That is what Vesterbyte does. We are in the business of providing equity-based investment opportunities for all Australians.
At a small level.
At a small level.
But when you say equity-based, you mean like property?
So, okay, yeah, definitely property. So if we want to talk about, let's just move forward a little bit and talk about one of our projects. So currently we have a property development project that's on the cards, and it's a 24 townhouse development in Bendigo North. It is...
which is up and coming, that's for sure.
Oh, Bendigo. Yeah. There's plenty of great reasons to invest in Bendigo. However, just to quickly...
We've got about like 30 seconds before we go to break, but we can come back to the Bendigo project. But let's keep going, yeah?
So just the quick summary.
Yeah.
Great project that's up at the moment. Minimum subscription of 250,000. So our initial investor group will be soon receiving their unit certificates, which is proof of ownership. And then after that, in the next coming quarter, they will start receiving their interest repayments. So very exciting for all those investors.
And investor through Vesterbyte can gain access to these types of investments at what level? Or what?
At only $2,000 using an online platform where they can easily go onto the website, read all the required information, all the disclosure, and go ahead and decide whether the investment opportunity is correct for them, fill out the form, make the deposit, and they're away.
Fantastic. All right, we've got to go to a break. We'll be back with the Mortgage Busters and Investment Show very shortly. You're back with the Mortgage Busters and Investment Show. So Scott, just reiterating the conversation we had before the break, the crowdfunding, can you just elaborate?
Sure. So the exciting part about equity crowdfunding is the fact that it is open to everyone. So, mums and dads, construction workers, university students, everyone.
And it's really accessible, like at levels of what, $2,000 investment?
Well, that's
just fantastic.
That's the key benefit. The key benefit of equity crowdfunding is, in fact, the minimum level of $2,000, and we're aiming to push the level down, by the way.
How far down can you go?
We're looking at moving to 1,000, and we'd ideally like to move it down to 100 because
it's crazy.
It might sound crazy, but what it actually does is it gives accessibility to everyone. And by giving everyone accessibility, it means that they're able to test the waters. Today they might have $100 to invest. Tomorrow they might have $300 or $400. So it gives people exposure to investing in a very affordable way.
Is there any age minimum?
Well, 18.
18.
So okay. 18 for financial products.
Yeah.
So the way Vesterbyte operates, we operate as an Australian financial services representative, and we hold authorisations to deal in investment products and to provide advice on those investment products. So we're all regulated. So structure-wise, simple-wise, how this works. So basically, there's the crowd, you make a decision to make an investment, together that money gets pooled for the crowd, and then together that money is invested into a project like Bendigo. Once the profit is realised, then all the individuals involved, the crowd involved, will receive a profit share. So it's quite simple.
So when you say the crowd, You're talking about individual investors that...
I'm talking about
Mums and
every
dads.
single person that tunes into your show.
Yeah, fantastic.
Your whole audience is able to participate in this new and innovative product.
Yeah, okay. So it's just that terminology is, I just wanted to make that clear that individuals can get involved at levels we're talking about 1,000, 2,000 investment.
That's the beauty.
Yeah, it's
Individuals,
fantastic.
everyone can get involved.
Yeah, yeah.
And that's the way financial products should be. Financial product should be available to everyone. So
Well,
everyone has the
if
same
you've got,
advantages.
And they're not.
you've got say $1,000 and you want to put it into some sort of interest account in the bank. What's the difference between doing that and doing yours? And you're getting a much higher return.
Higher return equals higher risk. So it's much easier to loan your money to the bank. And that's what you're doing. You're lending your money to the bank. The bank then goes on and they use it to make profit. So that's the easiest way
While
to
it's
make
sitting
an
there
investment.
doing nothing, because that's what's going on. Nobody actually knows that. That
Correct.
they actually sit, while your money's in the bank account, it's being used,
That's right. So
and for free.
Yeah, but it's being used more than once.
Of course
it's being
it is.
used like 50 times.
Multiple times, for 1% a year.
So I mean, look, that is the safest way to invest, and I guess most people don't even consider leaving money in the bank as an investment. And
No.
unfortunately, with the way the rates are going, maybe that could be negative interest in the
Well,
future.
it
maybe
probably is.
maybe if you want to keep your money in the bank, that they're going to be
It's
asking
eroding,
you to
yeah.
pay them money to
keep it there.
to hold it for you.
Yeah,
The way
correct.
things are going. So it's important that individuals start considering investing and start taking control of their finances, in a nutshell. And that's basically what Vestabyte does, and Vestabyte's here to help. So I'll give you a quick rundown of what Vestabyte does. So
Please.
Vestabyte sources and secures projects and ventures. Okay, after we've secured a project, we'll then go through a vetting process, a due diligence process, where we look into the project itself, the individuals involved, and we make sure that we're happy with how the project's been set up, the legal structures used, the people involved, their track records, etc. And then after we've gone through that and contracts are in place, the investment goes up onto our online platform, where we're then able to market and promote it to everyone, like your audience. So that's basically how it works.
So, investors that are interested in this strategy, right? What's the outlaying time? Is there how much? What in time? That's the question I'm asking. Is
So time.
besides the amount, whether it's $1,000 or $2,000,
Sure.
what's the outlaying time?
So I guess the other beauty about the way Vestabyte operates and the offers we have is that they're all individual offers. So the individual projects that have slightly different investment terms. So going back to Bendigo, Bendigo is a 3-year term at 10% per annum. So those are the basic details of the project. Now, we'll be looking at offering a whole different range of projects that have a whole different appetite of risk and have different timeframes around them. So it'll be up to the individual to make a decision as which product is more suitable for them based off their own personal circumstances. Now, the beauty at starting at $2,000 means that you can actually, put a small amount of money into multiple projects. So suddenly you've got a much more diversified portfolio of investments than you would have by just putting your investment into a singular
Share.
for example, a singular company. You're spreading your risk and you're doing it yourself. So it's really a very smart way of investing.
Is there still a prospectus involved, or how is it put
So
together?
this is all done using an offer document
Okay.
known as a PDS.
Okay.
And that
As in product disclosure?
statement.
Yeah.
That's correct. And what that document does is it outlines all the information about the investment, has all the disclosure, it explains everything that's going to go on end to end and all the risks involved. So after an individual has read through this document, they're then in a position to start thinking about whether the investment opportunity is right for them.
So Scott, with regard to the Bendigo project, tell us more.
The Bendigo project is a really exciting project. So not only are the fundamentals perfect, other than that, the amount of government spend in the area on infrastructure is quite significant, to the point where there's some really great facilities coming up for all the people living in the area of Bendigo.
I mean, we know that area is booming.
It's definitely booming.
Yeah.
Significant spend by the local government there. The Bendigo Hospital, it's undergoing a $650 million facelift, a huge facelift.
That's huge.
It's huge, and not only that. So the great thing about it is it's brought 300 odd jobs to the area, and of those 300 jobs, over 220 of those are healthcare professionals. And these healthcare professionals, they need to be housed, and they need to be housed close to the hospital. And this Bendigo project is under a K from the hospital.
All right.
So it's
Okay,
perfect.
we need to go to a break. So there's more to say about Bendigo,
Sure.
but we'll come back.
Okay.
You're watching the Mortgage Busters and Investment Show. We'll be right back. You're back with the Mortgage Busters and Investment Show. So Scott, we're talking about the project in Bendigo.
Bendigo, yeah,
There's
fantastic.
the hospital, there's the airport.
The
there's
airport,
lots
yeah.
of what's going
well,
on here.
the airport, it's going through a major upgrade as well. So a $15 million spend. They're adding an additional runway and some significant upgrades to the surrounding facilities. So that's great, adding that kind of level of infrastructure upgrade in the area. Other exciting things that are occurring in Bendigo is a major renovation to the Bendigo Stadium. So it's actually being upgraded into a world-class sporting facility. The only one in the area, which is again fantastic for local residents as well. Other exciting things occurring in Bendigo is a major uplift to Canterbury Park in Eaglemont, so Greater Bendigo. Again, world-class sporting grounds have been installed, upgrades for the bowling club, the netball club, the cricket club. So, the locals are really lucky to receive this kind of quality sporting in the area. So it's all very exciting.
So obviously you've done your research in that area.
Definitely. So as I said before, as part of the due diligence that we go through when we're looking at a project, when it crosses the Vesterbyte table, is to ensure that the fundamentals behind the project are strong, and the fundamentals here are very strong. And the other good things about Bendigo, as I mentioned before, is the fact that it's quite a young family area. It's predominantly owner occupied. The highest age group is actually children. So all those things are great as far as an area to live into, and an area that's expanding, having such a youth around it.
Yeah, absolutely. And the returns?
The returns.
I mean, we talked about it earlier, but just reiterate the returns on
the returns
the
are
average investment.
10% per annum is the return on this particular project. Now it's split off in two parts. So you'll receive 5% per annum throughout the whole length of the project, paid in quarterly arrears, so paid quarterly. And then at the end of the 3-year term, you'll receive your principal back and an additional 5%. So it works out to be a simple 10 per annum.
That's pretty good. That's it's better than bank rate, that's for sure.
3%.
So far, the response from investors has been great. We've had the offer up for less than 30 days. We've almost met the minimum subscription of 250,000. It's only 4 days away. Confident we will hit it. And shortly after that, unit certificates, which is proof of ownership into the project, will be sent out. And not too long after that, the investors will start receiving their first interest payments.
Fantastic. So what's in the pipeline?
What's in the pipeline? So again, Bendigo is a multiple stage project. So we're about to successfully close off the first stage, and we'll be looking in the coming weeks to then reopen another stage. So it's a great opportunity for investors to get in contact with us and get in a position to be ready for the next stage to invest.
So bust your mortgage.
Yeah, bust your mortgage.
Bust your
Absolutely.
mortgage.
We haven't got that much time, so
Funny you mentioned
You've
that.
got something for us?
Funny you mentioned that. I do have
please let us
something
know.
for you. So, what Vesterbyte does, and this equity crowdfunding, another way of talking about is micro investing, right? So investing small amounts of money is micro investing. Now, lucky that it's out there, micro investing, and Vesterbyte's one of those people that can bring that to you. So I'll put together a little case study just explaining what micro investing can do versus your mortgage offset. You guys are aware of the mortgage offset. Yeah. It's where you park most of your money. So let's take this case study for example. So
we've got about 2 to 3 minutes to make this happen.
Let's do it quickly. So
and this is the juice. We want
this is the juice. This is the meat. Okay, so 3-year term, $2,000. That's your investment amount. Okay, so over the
So it's 2,000 over 3 years.
$2,000 you've invested, it's a 3-year period and it's returning 10% per annum. So gross, you're receiving $600. After you pay tax, and I've chosen 30%, it's about average tax rate, you're looking at about $420 in your pocket at the end of the 3 years. Now, if you were to leave that money in your mortgage offset, saving you around 3.5% per annum, at the end of that 3-year term, you're looking at about $210, which happens to be exactly half, right? So what are the findings? The findings are that by investing small amounts from your mortgage offset, you can actually put yourself in a 3.5% per annum or 10.5% over 3 years advantage than whether you would have left that money in the offset. So by micro investing over small amounts, you can actually beat leaving money in your offset.
But a lot of people have got 50, 60, 100 grand in their offset accounts. So
what do they do?
While it's sitting there doing nothing,
Do more.
So what they should do is they should obviously decide about what their financial position is, and I believe you guys have a report that can help with that, so they understand their position, and then they should make some decisions around how much of that offset they would like to invest as part of their strategy, and go on and utilise some of that money that's sitting there that isn't really used at its optimum.
Fantastic. This is, I think, a fantastic strategy because you can dip your foot in the water for the average consumer, the average viewer for this show can actually gain access to these investments with that and not lose sleep at night.
No, so with the small entry level, what it allows you to do, as you said, is get a toe in the water, have a bit of a dip, and build some confidence that it's the right approach for you, and then start to stage up your investing after that once your comfort levels have reached. But the point is, with a low accessible entry level of 2,000 or less, it means everyone can get involved and everyone can work out whether or not it's a strategy that works for them.
Fantastic.
so students,
Adrian,
even students.
I think we're just about done for this show. Yeah.
So if anybody wants to find out more,
Absolutely.
get in touch with us.
Get in touch with our number, which is go on.
This is the 1300 TMB show. 1300 TMB show.
Come on, that number again is
1300 TMB show.
and the website,
Well, you can go to our website, tmbshow.com.au.
and of course SMS.
Yes, 0431 588 188.
And the SMS is because everyone's using the SMS,
Yes,
which
they
is
are.
fantastic.
188. So you can even send a message.
So
and
check
your
out
name.
our Facebook page, check out our website, check out everything, and just get in touch with us.
See you next week.
So Scott, fantastic. Thanks for being with us today. And
Great.
look, I think we'll have you again next week. Hopefully we'll get you back.
Great,
And
that'd be
because
excellent.
I'm sure we're going to have a lot of inquiry and answers need to be.
Plenty to talk
Yeah,
about.
absolutely.
Well, when
There's going to be a
something-
lot of questions and answers that need to be made.
When something is new and innovative, it's certainly exciting to talk about. So
Fantastic.
great to be here.
Thanks again.
Cheers.
We'll see you again next week. You've been watching the Mortgage Busters and Investment Show. We'll see you again next time.